regular weekly update. This is my favorite one of the month that I get to do every time because the stats for the previous month have come out. So we get to break down what's happening locally here in our market, really the only market that matters. National news is great, but at the end of the day, who cares? Let's just talk about what's local. So do a slightly different twist. We're going to skip the first couple slides I usually show, but we are going to jump into the regular thing. Hey, Jeff, how's the market? Well, here we go. These are the stats that we just published the other day, both Jeannie and I personally, as well as on our Facebook business page. Average selling price in the Portland area is $510,000. So we did go backwards from last month, 0.2%, so we're flat. But we are up almost 11.5% year over year. So prices are booming in the Portland metro area. On top of that, we're 38 days in the market, down from 41 last month and 52 days the same time last year. So this market is moving fast. What that basically means is on average, house hits the market, and on average, whether it's a good listing, bad listing, entry level, or a $15 million place on the lake, 38 days it's gone. So we're screaming fast, all things considered. Could be worse. Apparently the city of Denver right now is their days on market average is about 6, or I think it's their median maybe. Anyway, so Denver, God help if you try to buy a house in Denver, it's even worse than here. We had 3,200 closed sales for the month, which is up from last month and way up from last year. So 37% increase year over year on closed sales transactions. So it's screaming. And what's the net result? We talked about this. We made kind of a post about this. That Portland has made history. 1.1 months of inventory in the Portland metro area. So essentially, let's just round it. It's 1 month of inventory. So if no new homes hit the market, current pace of sales continue, every house in the Portland metro area would be gone in 4 weeks. We say this is historical because Portland has never been this low ever since the RMLS has been recording this, and that goes back to 1999. So 21-year look back. 1.1 months is it. So last month we were 1.3. The month before that we were 1.2, and we've been at 1.2 a few times. But it's onesie twosies that we've been at 1.2. We're now 1.1. For frame of reference, we're at 2.8 the same time last year. So this market is flying, and there are simply no homes, which is why you're seeing the prices booming up the way that they are. So we're going to dive in this even yet further. But I do want to put kind of frame of reference for the inventory trends. You'll probably see these popping up on Facebook quite a bit. This is the easiest little slide to share. A lot of us realtors love showing this one. This shows the month of inventory trends for the last, effectively almost 3 years. So you see the 1.1, and kind of compare that back. Last year was 2.8 months. The year before that was 3.1 months. We just have not seen these inventory levels, 1.1 ever, but this sort of sustained level for quite some time. So I'll show inventory here a little bit more in more detail, but this is the biggest driver of our housing market right now. There simply are not enough homes to go around. The demand is there for people who, whether you're looking to move up, move down, move around, or people who are moving into the Portland area, which still continues to be a big thing. There's just no houses, so people are clamoring. Other big news that we're hearing right now is there's a push for the suburbs to get out of dense areas. People want bigger lots. They want more space. They want destination homes. Whether it's you're on water, you got a pool, you've got something unique and special. People have realized that COVID has sort of reminded them what's truly important in life, and people are buying houses accordingly, and they're just not out there. So similarly, you always hear me talk about it's supply and demand, and there's just with the urban growth boundary and such, there's just no place to add a substantial amount of new homes. So I don't see this getting any better anytime soon. I guess this is I should have had that slide if you convince me otherwise, but I don't see this going away for a long time to come. So other trends that we're seeing, here's sort of your inventory shortfall. And I like this because it shows sort of that 3 years, and it kind of puts it in a frame of reference, right? So we are currently sitting at a little over 3,700 active listings on the market compared to almost 2x that in the previous years. So we are way, way down. And if you look at what happens over the next 3 months, historically speaking, for the last 2 years, it goes down. This gets worse. So we're about to have even fewer homes, perhaps, over the next 3 months. We'll have to see what happens. I think, in all honesty, I think COVID has changed everything for this year. A lot of our regular trends and timing and cyclicality seems to be somewhat out the window. So what the next 3 months take a big tank like we've seen in the last 2 years? Maybe. We may just, I wouldn't be surprised if we just flatline and still hit where that last green dot is in December. We simply don't know. It's a crazy year because of COVID right now. But active listings are way down, so let's keep that in mind, right? We don't have enough homes actively on the market. So now let's look at what we're happening. The top slide are the new listings that are hitting the market, right? So the new ones. We took a big dip during COVID, right? You can see the timing of that. You see the nice little recovery coming back up. And since then, we're sort of, you can make the argument for the last 3 months, we're in line with the typical seasonality of the number of new listings coming onto the market. Now, that trough in the middle is going to be a hard one to offset, especially when you look at the lower chart of the pending sales. Pending simply means a contract has been written, has been accepted, and then you're just going through that 30-day sales cycle for the same to close. So it's under contract. We are way ahead of trends for the last 2 years, over the past few months. So you put those together, and there's just simply no inventory. And then, of course, the last little piece that we showed there was the average market time. For a while now, we've been kind of hanging in there with sort of the seasonal trends. The market time gets lower, meaning the market's moving faster in the summer months, cruise along just fine. And now for the last 2 months, 3 months, you've been seeing that divergence from prior years. The market's accelerating. People are starting to figure out rates are comically low, rates in the 2% solid range, and without a lack of other homes, people are flying, and it's just kind of a crazy market. So a couple of the charts that I just like kind of personally showing. This is one that I've been tracking. I've got this going back to January of 2000. I guess if I want to show true full history of the MLS, I'd go back one more year, but whatever, 2000 makes it round. But this one here just showing kind of a few points in time. These are the September trends. So every September going back to the year 2000. The blue bars are inventory. The gold line is your average selling price. So what you see kind of in the middle is you see inventory tanking down early on. That's your lead up prior to the Great Recession. The big camel hump in the middle, that is the Great Recession, where we had more inventory than we knew what to do with. And now sort of that return to normalcy. The red line on the bottom is simply just to show sort of the trend line of where we are now at 1.1 months. So as you look back in time, you can see how that relates to prior Septembers going back for the last 20 plus years, right? So when we talk about this is a historical shortfall of inventory, there's your frame of reference. Even in the busiest of times leading up to the Great Recession, we had more inventory than this. So this is not a precursor of, oh, here we go again. It's absolutely not the case. This is just sort of I think it's a whiplash recovery from the Great Recession that's continuing on. People are ready to buy homes. You've had people who went through a foreclosure, bankruptcy, other things related to the Great Recession. Those are now gone. They're back in the market. Rates are dirt cheap. And again, we're constrained on where we can build houses. There's simply just not enough real estate to go around. So that's your shortfall. Now, this next one, I hope this one's going to show up as kind of an eye chart, even as is. This is literally, this is every month going back to September. So not just the Septembers, but this is, I just wanted to kind of show that full trend. I did not try to do a little red line graph simply because it just, you can see it. Again, the blue bars are inventory. The gold line is your pricing. So to say that we have recovered from the Great Recession is a mild understatement. Prices are fantastically up. If you go back to the year 2000 and fast forward, if you look at what some of us financial nerds call the CAGR, or compounded annualized growth rate, it's for 20-year trend, it's up, just shy of 5%. So basically showing Portland real estate is a nice little solid investment. I think if I looked at this from the depths of the recession until now, it's probably much even higher. At that point, we probably outperformed the stock market for real estate holdings, certainly less volatile. So I just found this to be kind of a fascinating look, just to kind of give frame of reference of where we're at. If you look at that far right, those inventory levels are significantly low. So I think the next steps beyond looking at just how we're doing here in the Portland metro areas, I do sometimes say we need to look at some of the national headlines or some of the stories that are coming out more on a kind of a global basis. So Fannie Mae just did their monthly survey, if you will, kind of look at their analysis of where we're at, the health of the housing market. So the Home Purchase Sentiment Index is essentially kind of like, buying houses, how do people feel, where are we at, kind of thing. If you look at where we're at in that little gray box on the far right side, we're at an 81 on the scale. It's not bad. You see the little COVID trough there in the beginning. The important thing here is if you start looking back in time, how does 81 on this index measure up? We don't have to understand how the index is measured. It just, I don't want to care about that kind of level of math nerdery. But what I do on things like this is I look back historically. How does 81 on the index compare to past periods of time? And it's significant, right? We're in check, we're in line. It would indicate not a fever pitch, not an overheating of sentiments, if you will. We're kind of in a mathematical average, if not probably below average, for the last 8 years on this type of an index. So found that to be kind of interesting. When you break the details, breaks down into details, the buying conditions. 54% of the people think this is a good time to buy. 38% say it's a bad time. So you're net positive by 16%. So this is where, if you hear or see articles talking about a national survey show a cooling in the market or a downward trend or whatnot, 54% still say this is a great time to buy. The downward trend they'll talk about is that index is down 8 points from previous. So are things cooling? Yeah, perhaps, right? But that's logical. It's not going to go for forever. Seasonality will kick in, so we will start seeing things cooling off in the last few months of the year. That's just what happens. Down the line, 56% of the people think this is still a great time to be selling a house. Of course, right? Prices are stupidly high. The markets are churning super fast in most areas. So yeah, it's a great time to be selling a house for sure. The home price outlook, 41% of the people think that the prices are going to continue to go up, compared to 17 who are thinking it's going to go down. And I promise you, of those 17, probably 2/3 of those are people who are just hoping that they go down. So if you vote for it, it comes. It's a stupid bet. Prices are not coming down. At least certainly not in the Portland area, not on a meaningful basis anytime soon. Mortgage rate outlook, for them to go down 11%, go up 38%. Safe bet, right? Mortgage rates are so low, I can't fathom they get any lower, but I think I probably said that at 3.5% level too, so who knows. But the interesting part here are the next two, certainly the next one, the job loss concerns. 83% of the people are not concerned about losing jobs. And I think this ties back to what we've talked in past weeks about this realization or this idea that if you're going to lose your job due to COVID, you already have. Right, we're on that path to kind of recovery economically through whether it's policy coming out of the White House or they're talking about kind of the relief, next wave of relief measures, or just we outgrow these things as a nation over time. There is a natural rebound that happens. I don't know, but either way, people are not by and large concerned about losing their jobs at this point in time. Now, what that rating would have looked like back in, say, April or May would have been probably a more interesting comparison. But for now, that health is there. And that's what's fueling a lot of people saying it's time to go buy a house. I'm not concerned about losing my job. Mortgage rates are stupidly low. I need to go find a house. This is just happening in every market, or every good market. Certainly in the Portland area, we are seeing this, and thus 1.1 months of inventory, right? So what else are we seeing that's noteworthy? As we talk about, it's hard to build in a lot of areas in Portland. This article came out, and this is a national look, right? But it's certainly true, and we'll break this down a little bit, somewhat locally. There's a big rush to build, right? There's such a shortage on a national basis of available homes, simply because so many builders either went out of business or just stopped building back during the Great Recession, because inventory just died for a couple of years. So now, as you are building, there's such a demand. People are cramming houses in, so your median lot sizes are way down year over year. Again, and this is another trend that, again, I just don't see this one going away anytime soon. Lots are getting smaller, things are getting more expensive, prices are up. It's a bad trend. If you look at this on a national basis, the West Coast, kind of the Pacific region there, we lead the nation, I guess, if you want to call it that, on the smallest lot sizes, median lot sizes at 0.15 acres. So the kind of the west, south, central at 0.16 is close behind, but we lead the charge here at 0.15. And basically it's because you've got things of so much natural land that wants to be preserved, whether it's forestry areas or national parks or things of that nature. You got unbuildable areas, or you just have places like Portland who say, hey, let's do an urban growth boundary. Let's draw this artificial ring around the city. Can't build outside it. So therefore, it forces more density. It forces a little bit of control over the sprawl. And then the side effect, of course, is prices go to the moon because you can't build anything. So small lots are here to stay. So I sort of throw that out because this is part of the impetus, I think, of what we're seeing right now of people who want to get more land. They want to get bigger lots. People have bought homes. The big trend right now seems to be developments either have little small backyards or on entry-level homes, you get the little small side patio with the thoughts that you can go to the community parks to run around and play. Wilsonville's got one. Beaverton's got some. Northwest Portland has them. And it sounds good on paper until something like COVID hits and the parks are closed and you can't get out. Right. And so I think you're starting to see people are kind of whiplashing a little bit. It's nice for the starter area, but people want to move up and move away from that. They want a lot. They want more of a yard. They want some other trends. So now you've got constrained ability to build. You're building in smaller spaces. What else could go worse? And we've talked about this before, but I thought this is a good visualization of something that we've talked about here a few times, which is your lumber prices are way up. It says, I think it's a 65, 67% increase over prior periods just for the cost of the lumber. And if memory serves, we're down, or the home prices are up like $16,000 just because of lumber prices. Now, factored into this going forward, you've got the notion now that we've had the fires here in the West Coast. So Weyerhaeuser got hit a little bit. I think I haven't seen any articles yet saying how much of an impact the fires had, whether on production facilities, ability for staff to come into work, people who have been displaced from the fires, or simply destruction of forested areas. So it's going to be, I think a long, heavy slide for lumber pricing. Plus now you've got COVID requirements for what houses can be built, and how fast you can build them because you have to space out your workers and so forth. They're outside, which makes it a little easier, but I think there's still just going to be some supply concerns. And I do see somebody put in a comment here that the house has been for sale for a while. It's dropped the price a few times. And let's not discount this. It's a super hot market. Prices are going crazy. Inventory is moving fast and fast and fast. That said, it's not a completely illogical market. Not every home is flying off the shelf, right? I think the general notion is, those that are in the right areas and priced right and so on and so forth, are moving at a healthy clip. There's also a distinction, what we're seeing personally, of homes probably, upper 600s and lower. It's a frothy, healthy market. You get upper 600s and higher, and it slows down because the jumbo market for mortgages still gets a little bit tricky. So if you don't have buyers who have the cash down payments to get into just a regular conforming mortgage, if you have to go the jumbo route, they do move slower. And the fact of the matter is, it's 33 days, 32 days. I have to go back to slide 1. I've already deleted them, but that is the average, right? And so some are going in the first weekend, some are sitting around for 2-3 months. Houses will sell. Some of them simply just take a while, whether it's location, it's price, floor plan. And sometimes there are some houses that Jeannie and I see sitting on the market, and we scratch our heads and go, how is this one not selling? It doesn't make any sense. So, these aren't steadfast promises in the market. These are the trends. And so, if you've got a house that's just sort of sitting and not moving, and you're getting frustrated, give us a call. We'll give you our opinions of what we see, what we think. We've had a few that sat for a while and then eventually they go. Sometimes it's a matter of finding that right buyer for that right house, especially if it's a more unique home. So there you go. So yeah, hey, appreciate the question coming in. Sorry I didn't catch that sooner. I could have responded to you when you're still around. But that's your update. 1.1 months of inventory. We've made history. Does it get lower going forward through the balance of the year? Well, we'll have to see. It's like I said, this is my favorite update of the month every time. And hey, Michelle, you're still here, so nice. Thanks for keeping tuned in. So West Lynn, great location for that house that she talked about. That's just sort of sitting, and without knowing the house in question, Michelle, it's hard to say. I do have a couple clients who are actively looking West Lynn up to a very healthy price point, and I'm struggling to find them the right house because of what they want. And a lot of them seem to be those that are sort of hillside, so there's no yard. So that makes it hard for a lot of buyers. In some cases, you see these 4-level homes, and that's a tough sell because that's a lot of stairs inside. So anyway, thanks everybody for tuning in. Thanks for your patience on one of my longer videos in quite a while, but I can't help it. I love the Market Stat Mondays. So anyway, hey, have a great week, and we'll talk to you soon. If you guys have any other questions, comments, concerns, curiosities, just want to talk about real estate, give us a call, shoot us a private message, email, text, whatever. We're